Good afternoon, everybody. And thank you for staying in here to listen to me. I'm actually going to talk about the MONTREUX Healthcare Fund, which, as opposed to being specifically for the elderly, is what we call the specialist care market. Which way forward with this? Okay, there we go. The specialist care market, as we invest in, is split into several areas. Complex care, spinal cord injury care, acquired brain injury care, and on a residential and a domiciliary basis. By complex care, I'm referring to adults with learning difficulties, adults with severe difficulties who live in homes and are cared for in homes from different levels, from those who have very small needs to those who have sophisticated needs. Now, these aren't homes as you imagine it. If I was to say to you about a care home, you normally think of a home with 50 or 100 rooms, and more like an institution. Our homes would typically have 5 or 6 rooms and be in a neighborhood where you live. And they will be integrated into the local society so that they can live a good and better life, often taking jobs within the community. The spinal cord and acquired brain injury areas, homes, are specifically geared at people who've had injuries, something that's significantly on the rise in today's society. More people are doing more active things, and people are being kept alive longer, and therefore the care for these people is required more and more. And it's a residential care, and then it's a domiciliary care. Care for them in our homes, and eventually, we hope, care for them in their homes. The market, it's sort of, I call it a market, but it is the people that we deal with, the numbers are growing and growing, partly through more accidents and partly through the fact that we are keeping people alive longer through the care process. And we see that there is a market of, well, many billion pounds in the UK in all 3 areas that we deal in. And as you see again on this slide, this is growing in numbers all the time. So we're getting more and more people in care, and it's expected to increase as we go forward. Now, what I'm going to talk about is the fund itself, because it's all good providing the care. I can come to you and say, we provide care for people, the care is great, and it is great. How do we make money? How is the fund produced? What does it do? You know, if you're investing something like this, it's investing in good. It's a good socially responsible investment, but how do I make my money? This is should go forward a bit further. This is a business that we recently built up and then sold. We bought it by buying a smaller business and then building smaller home businesses onto it, making the business bigger, starting with an EBITDA of around about £12 million and taking up to a business with an EBITDA of around £23 million. We were able to sell this business for a significant premium at the end of 2017, yielding our investors a great return. And we did this by increasing occupancy, buying new beds, buying small businesses at a fair value in the market, but bringing them into our business, taking out the head office costs, and making one very strong care business that we were then able to sell we had several buyers trying to buy the business at the end of 2017. And this led from our investors who came in 2015, over a 3-year period, made a return of 75% on their capital. 20% in 2015, 11% in 2016, and 27% in 2017. We've just had the results in the final months of 2018, and the return for 2018 was a further 14%. So that's a significant growth. And we find our investors that are coming into this model are coming in, investing with us for the first time, and then are coming back again and again to invest more money as they understand more what we do and how we do it. One thing that's always very interesting is when you're looking at these alternative investments, and particularly our healthcare investment, is the correlation to the market. You know, we're in very volatile times at the moment. I notice every day looking at the indices, they're up, they're down, the bond yields have been dreadful, but we are bearing no correlation to the markets themselves. We own these homes, we operate these homes. So the homes, we own most of the buildings, we provide the services, we provide the care, we do everything from A to Z, providing a full 100% care service. So we aren't in the control of a landlord because we own the properties. And that is a significant factor in the way we operate our business, because it's backed by real assets, but it's providing real care with very little correlation to anything else in the market. So let's look at the investment strategy a little bit and how we really do make the money. And you'll see on this slide here, there are several areas, but two specific ones. One is merger and acquisition. We are maybe the fifth largest player in the market in the UK now with our current business. But we have a very small market share. There are hundreds and hundreds of small companies owning 3, 4, 5, maybe 10, maybe 15 homes. We completed on a sale yesterday where we bought a very good care business for £70 million, which has 19 really good homes in it, providing care for adults who have been having an epilepsy problem, which leads to all other concerns. And we've bought that business. That's added significant value and pushed our fund up by 4% yesterday. But more importantly, we'll take out the management, not the care management, but the financial management, and include it into our company. And we'll make between £750,000 and £1 million in cost savings over the next few months, which will be reflected in the value of the fund, again, giving us more value as we go forward. So that's the merger acquisition. You've got the rationalization, and then you've got the consolidation. In addition, we make money by what we call the organic growth. And the organic growth can be, there's a word up here, and I don't know how they've translated it, but in English we say knitted beds. I've no idea how well it says on there, but knitted beds basically means because we have small properties with maybe 5 or 6 rooms, we're very easily able to build 1 or 2 more rooms at the back. These rooms are done at a relatively low cost, but at immediate value to the property that we have the clients in, enables to have 2 more clients very quickly into a property, a lot more profit into the fund, and therefore going forward more value to the fund investors. And then we have property development itself. We are clustered around the UK. There are certain areas where we have a lot more need than others, and where we see a property that's on the market that we can develop, we'll buy that property, we'll develop it, put it into the system, and very soon have more clients residing in that property. And that makes for a very quick profit and good use of capital. I want to talk a little bit about the fees. How do we actually make the money? How are the fees paid? The government pays most of our fees. Now, it's quite different to anywhere else in the world. The British government has it enshrined in law that they must provide the care for adults with learning difficulties and complex mental difficulties and complex injury difficulties. They must provide the funding for the care. We also get funding from insurance companies where a client has been awarded damages following an accident or an incident, and then the fees from the insurance company cover our costs. Now, people say, how do you know the government is going to continue paying your fees? Because this is one of the important factors. The thing is, we do it a lot better than the government. We do it a lot cheaper than the government. And we are taking people out of hospital beds. In Britain, many of you may have heard that we have the National Health Service, the NHS. It's a universal health service, but it needs the beds to be free for everybody to use. And if you have what we would call adults with social problems, with mental problems, filling up beds in hospitals, it's costing the government a lot more. Typically 50% more than we would charge for them to be in one of our small residential units. They don't necessarily need all of the facilities in hospital. So the government pays the fees because it's better for them, it's better for our clients, and it saves a lot of money over the long term. And of course, someone says, well, yes, but they can always cut your fees. They can cut the fees, but it's a vote loser. Any government that cut the fees too much, they're going to end up being out of office. And as we know, politicians don't like to be out of office. So going forward, we see more funding from the government, more places from the government. We actually have waiting lists for our places. And so this brings the cycle around more. We can constantly put more rooms on, make more profit, grow the business even more. And we will take this business that we have now, and within the next 12 to 18 months, we'll probably sell this business again, because the idea is we will sell this business to someone who is looking for a business with a good income yield, and we will start again. Our job is to provide the care, consolidate the care, build a good business that someone else will want to buy. And when they buy that business, they will usually buy it at a big premium over its current value. Hence, last year we saw, in 2017, we saw the 27% growth, because that includes a big bonus from when we sold the business on and started again. At the beginning of 2018, we bought this business, Active Assistance. Active Assistance is primarily brain and spinal care. It's a superb business, and we are now going to grow this business on, and we're already well on target. We're already, with the purchase we made yesterday, we're now up to 21 million of EBITDA. So we've got 21 millions of earnings in there, roughly at a multiple of 10 to 10.5 times, valuing the business significantly. And we're on track to take the number of beds right up to 1,400 beds in the next couple of years, growing the business by buying and merging, stripping out the unnecessary management costs, but improving the care. Because one thing I will say is that care is actually the most important thing here. And the more we spend on care, the more clients we get from the government bodies, the more buildings we can create, the more places we create. And all of our homes are rated as good, or very good, or excellent, which is 4 or 5 star by the government regulator in the UK. So not only have you got a fantastic financial return, but we're providing great care, something that's socially responsible, but giving you a good return on your money. And this is the project that we're building currently to take this thing forward. As I mentioned before, the business is spread around the UK. So we have access to facilities across the UK, or mainly in England and Wales. So where we need to buy a new property, we've invariably already got a structure in place nearby that we can build onto it. So we're able to extend our business with relatively little extra infrastructure cost, because it's already there to support the businesses we create. Of course, people ask me, what are the risks? I don't really see financial risks being a problem here. We have a structure, we're taking it forward, we know where the fees are coming from long term, we know how the fees are going to pan out, we know the market isn't going to get any smaller. Obviously, we are UK based, and there's a UK word that I hate every time I hear. I'm sure some of you may know what's going to be said next: Brexit. Everywhere I go in the world, one of the first things people say to me is not, hello, Andrew, how are you? It's, what's happening with Brexit? Is your country really crazy? Now, Brexit won't really affect the fund, because it's totally UK-centric. Everything's inside the UK. So we source everything in the UK, the businesses are in the UK, and the funding comes from the government. And whatever happens, the government will continue to fund this mental care, because, as I said before, it's cheaper for them, and it's political suicide to change it. A couple of areas that could affect us and have affected us is the terms of staff. At the moment, we recruit many of our staff from within the EU, and those staff we will not be able to recruit in the future. So what we did do last year was we actually bought a staffing agency. And that staffing agency now is one of the best ones in the country, and it supplies the staff to us, and we supply the staff to other groups as well. So basically, we get the best pick of the staff. So we've already taken action, just in case Brexit does go through, or when Brexit goes through, to give us the support we need. So that is one of the big problems. So finally, in summary, looking at what we have here is, we have a long-term structure. It's building upwards with good demographic trends. The trend is there'll be more clients, more residents. There is a supply and demand imbalance. There are more people wanting places than there are beds. The private and public sector mixed together is a great funding opportunity, and the government will continue to fund. We have high occupancy levels. Our homes run at around about 95% occupancy. We can never run at 100% because sadly patients do die, or they move into other better accommodation as we get their care lessened Always our aim is to make people have a safer and better life. It's a high barrier to entry. It's not a market you can just walk into. It's EBITDA value. That basically means we've got a good, strong valuation system based on the actual earnings of the business. As we say, low resident turnover, high occupation rates, and we have lots of consolidation opportunities in the market. Overall, it's a unique investment. It's an investment doing good, and it's an investment to those people who've been in it so far have made a lot of money. Thanks very much.